the very first hint that we got in regards to NFP on Friday. So let me double check I should have done this before. Let me just double check the audio, even though I believe it's just fine. So yeah, all good. So yeah, as I was saying, just a few minutes away from the ADP, and let me just do a quick briefing on where we are standing so far today. So as you can see in my screen right now, perfect, all set. So we have this dollar index. So stabilize a bit, steady a bit at 96 territory. Uh, and if I just, yeah, 96. It looks a bit. It looks like it's not literally moving ahead of the of the data, but it is. It is live. So steady so far today. We have seen that the risk appetite has been recovered somewhat with volatility, like even though the volatility remains elevated, we can see that it has eased a bit ahead of the US session in in an hour time. So we have seen already overnight, in general this week, a lot of Fed speakers, sorry, a lot of comments from the officials, and so on and so forth. So where we are standing right now is with markets pretty much weighing up all these hawkish comments that we have seen from the Fed and everything that has to do with the Omicron variant, the risk related to this Omicron variant. That's why we've seen uh, this week all these ups and downs, as we said yesterday in our Instagram live. So the dollar right now, as I said, it is a bit softer. It's May morning. Okay, euro. I got a signal, a sign in regards to an article in regards to euro dollar, but it's also steady at 113.16 ahead of data. So far, we have seen a softer Chicago PMI and the consumer confidence outcome, which came a bit lower than what was expected. But yeah, everything is really everything else depending on the ADP number, which is expected to decline slightly from last month's reading. So 525,000 is what is expected. 571 is what we have seen in October. We have also ISM manufacturing PMIs soon, along with the building permits from Canada. Crude oil stocks later on as well. But as I said, the what is it has driving the market so far is everything that has to do with the Omicron variant, with the comments from with the comments in regards to the vaccination and to the current vaccines. But as we have seen for few months now, the key movers remain the central bankers and their comments. So what we have seen from Mr. Powell and Ms. Yellen yesterday, but let's stick to Mr. Powell until we got the ADP number out, is a more hawkish stance. So we have seen that they have released their testimonies on Monday afternoon, even though the testimony was yesterday, the live testimony was yesterday, even though there was nothing new and no hints on whether the quantitative easing taper pace will be lifted off or not, or whether they will change anything in regards to the rate. However, the fact that they are really keen to keep an eye on the Omicron, the fact that they are highlighting that even though economy has continued to grow, to recover, to strengthen, we still have we still see some risk in regards to this fresh wave of cases again, of COVID cases. that could temporarily once again slow down the progress. Something wrong with my Facebook Live, I think. Not quite sure. I'm sure I have added the stream key correctly. So never mind. Never mind. It is what it is. So I guess okay. The comments that I got, guys. Yes, I know that you adore gold. Give me, give me how long? Give me 4 minutes to see the data, to see whether we're gonna have any surprise from the ADP, and I'm gonna check your comments. I'm gonna check. We're gonna analyze all the assets that you want. Just to let you know that so far the expectations for NFP on Friday. By the way, we're gonna have a Facebook and YouTube live as usual before the NFP on Friday with Stuart. So what is expected this week is actually a 440,000 increase in November payrolls after the 531,000 rise in October. So a bit a lower number than October, but still a growth, still a sustainable growth. And if indeed this comes true, if indeed we've seen this kind of a growth or even a bit of expectations, this could push further, we could say, the Fed um, um, to pick up the pace, as Chair Powell has said already, that it's the accumulation of evidence, not necessarily the report. So, in line expectations, in line numbers this week. So a strong report this Friday could be a potential catalyst for the FOMC to announce that it will speed up its quantitative easing tapering in December. So let's wait and see. Even though now with the Omicron variant, they might just postpone that for January. So it will be a very, very interesting thing to it will be very interesting to see how they will proceed if we have a very, very strong NFP this Friday. So, as I was saying, dollar, you can see that we have, let me just get back to the dollar. We had a big jump yesterday after Mr. Powell said that the risk of inflation had increased and signaled the central bank that bank may accelerate its bond buying taper. So let me just share it. So this is what boosted the dollar higher. We have seen a bit of a correction afterwards, settled at 96 territory. Anyway, in November, the dollar has its strongest month since June. And all that, whatever happened since yesterday from the testimony up to date, we can see that it keeps the dollar supportive. It supports the dollar. We have seen the global stocks. I didn't mention anything about stocks. My bad. Sorry. So let me just quickly shift to USA 500. So we can see that the stocks and the risk sensitive the risk sensitive currencies recover some losses as now the markets have started to pricing a bit of what's going on with the Omicron variant. It started to pricing that the Omicron variant will not derail the economic recovery. Let's hope that this will indeed happen. So we can see, for example, USA 500 over here sustaining this 4-day support, more precisely, more than a month support above the 200-day moving average and the 45-50 territory. So far this week we have seen that dollar means dollars got like a support from everything that's going on, and global stocks the same. So we have seen a shift of the market participants into like they're not worrying so much in regards um, to economic slowdown from the Omicron variant. But who knows? Let's wait and see. The data should be out. Yes, the data are out. So 534,000. Let me just share the calendar as well so you will follow me before we start analyzing the results and shifting to the assets that you want me to cover. So these are the date. This is the ADP number. We have a 434,000, 10 nearly 10k above expectations. We had a slight revision lower of the October's reading. So October's reading was at 571, a bit of a small, a slight revision, just 1,000, so nothing really significant, I would say. But that's a bit of expectations, so that could be considered as a sign that we will see growth once again on the NFP this Friday. So let's get back to the markets and just let me just so the ADP is pretty close to the expectations, and this is something that we might see as well from the ADP or from the NFP, sorry, on Friday. So on a very close reading in line with expectations. So private sector employment rise by 534,000 in November. So let me just double check whether I missed something in regards to what happened so far this week. I'm sure that you already know all the comments from the pharmaceutical companies, like from example, we had Moderna pressuring a lot the dollar, the stocks. On Monday, we had the CEO from Moderna saying that the inefficiency of the current vaccine to face the Omicron variant. Now we had yesterday night, or this, I think it was yesterday night, the BioNTech chief executive being in a more cautious, positive mood, saying that the vaccine makes in a partnership with Pfizer will likely offer strong protection. So that's why you see the comments. So on the one hand, we had a very pessimistic comment from the Moderna, but from the other side, we had a very positive comment from BioNTech and Pfizer, stating that there will be a stronger protection against the severe disease from Omicron. That's why the market started to price in the fact that Omicron will fail to slow down the recovery, the economic recovery that we are into so far. But yeah, concerns is still there, cautions is still there. So on whether the vaccine will work against Omicron or not. So that's why we haven't seen big surprises, and that's why we have seen the assets turning back into more to a cautious, steady sideways mode, like dollar over here 96. As you can see, let me get to the 30 minutes chart. You can see that the numbers, the ADP, they have been ignored a bit so far. I cannot see any spike or any pullback, nothing really to affect. I don't see a reaction on the dollar so far after the ADP number. So let me just so it's still trading between this is a 30 minutes chart, guys. Okay, you can see that the Bollingers have narrow, right, flattened. So the asset has pretty much stuck within the Bollingers, within the 9607 and the 9582 territory. So momentum still flat, still neutral. So it seems that the data didn't have any impact on the market so far, because of course we have many things to worry about, and many data too that they're still that they haven't released yet. So we have, as I said, market manufacturing PMIs from Canada, building permits from Canada, ISM manufacturing from US. Mr. Powell once again for a second day testimony in a row. Oil stocks as well. So crude oil stocks change as well. So there is still a packed events day. So that might be something to explain that why we didn't have any reaction from the markets. Anyway, the ADP, even though they beat expectations, they didn't beat expectations like massively. They're quite close to the um, to the um, consensus. So let me just, what else I would like to remind you to inform you about before we start analyzing the assets. Is anyone asking? Let me just, so gold, yen, hello Emma, gold, oil, Junior Zabrano, okay. Junior, I'm not sure whether you can understand me or not, but we have a Spanish analyst, okay, an analyst speaking Spanish, sorry. His name is Aldo, and he provides similar live analysis in the in Facebook. Not sure whether I can reply to you. So okay, Stuart will reply to you. Will give you the link for the Facebook account from the for the Spanish Facebook account, so you can follow Alto. You can see similar live analysis in Spanish. Okay, so don't worry about it. We do offer this option as well. So yeah, feel free to join Alto in his live analysis. So okay, guys, I can see that you're very interested as usual about gold, about pound, dollar, yen. So I will give me just few minutes to, at least, since no one is interested about stocks, but stock is the hot potato. So I need to go through a bit about stocks before we move to commodities and yen, because you know that the behind gold's move, behind stocks move, and etc. is treasuries. So you need to be aware of what's going on in the treasury yields market, in the treasury market, in order to understand the moves that you're seeing either in gold, either in stocks, either in dollar index. So what we have seen so far from equities perspective, from equities side. So here is example the S&P USA 500. So we had a big pressure on Tuesday Monday and Tuesday. Okay, as I mentioned, this was due to the new variant that boosted the sell-off, um, a sell-off in equities and boosted bonds. Okay, so the catalyst of this move was, as I already mentioned, the CEO Moderna's, the Moderna's CEO stating the non-effectiveness of the existing vaccine. Okay, and the fact that they will take it could take months before modifying the vaccines against the pandemic. That's why we've seen this dip, this pressure Monday and Tuesday down to 45.52 level. Okay, Are you with me so far? But um, after this sell-off, has the asset, the stock market has managed to recover some of these losses, of these weeks losses that we have seen. And as I already mentioned, what helped this recovery back above 46,000 is Mr. the BioNTech chief executive and his positive note, very contractory to to the Moderna one, okay, but also something that also supported stocks higher. It was it was that these comments from the biotech chief executive uh, calm down a bit the markets. And as I said, they calm down the markets, and now the market participants are really pricing in that the latest COVID variant will not derail the economic recovery. That's why we've seen this shift. Even though, if I go to the daily chart, despite this short-term recovery, we could see that stock markets and USA 500, for example, over here, remains below its record highs, the record highs that we have seen in the mid of November. Okay, so the appreciation that we have seen so far today, it doesn't yet means that we gonna it's gonna turn back to the record highs again and even extend it higher. Okay, because we need to keep an eye on the central banks. We need to keep an eye on the hawkish comments from the Fed, and we need to keep an eye on the fact that Mr. Powell said that the asset purchase may need to be tapered faster to fight rising inflation. So it's faster, meaning December, so in less than 2 weeks, because I think the Fed meeting is in 2 weeks' time. So is this the case? So that could be another selling that could cause another selling pressure on the global market. So let's wait and see. Yeah. So yeah, I mentioned that stocks found some support. Dollar the same. Yields in the meantime, we have seen that U.S. Treasury yields also performed slightly higher after Mr. Powell's comments. Sorry, for the time being, they have slowed down again. Okay. Uh, um, so they have slowed down a bit with the 10-year one back to 142%, so below yesterday's closing price. Um, so so that's why. So we have yields slightly lower, stocks up, and we should see gold. Where is my gold? Where's my gold? Should be somewhere here. Here was so indeed. Okay. And we have seen gold slowing down in the Asian session, but trying to gain some ground again. Um, so far today, despite the fact that yields have also since yields have dipped slightly further so far today. So gold over here, guys. I will start in regards to gold. Who asked for gold? It was Emma, it was Tevin, and Tevin. Okay, guys. So let's try to cover everything about gold, and I will start as usual with the daily chart. So first of all, let me just we have seen that gold has um, has found a bit of a positive momentum since September, which led it to 1880 territory. But the whole November, actually the last 2 weeks of November, we have seen a dramatic decline below all moving average and down to the trend line, to the 2 months trend line. Um, that we have back down below 1800s and down to the 1760, if I'm not mistaken. Let me just put this up. Yeah, 1769 floor. Um, this week, even though the sell-off started, as I said, since the mid of November. So what's going on? So we have seen, okay, so there was a big sell-off the last 2 weeks, more than 2 weeks. Okay, however, we can see that so far today it has managed to sustain a floor over here, a floor at 1769. So okay, we cannot really say that the gold outlook has changed. It's still negative. It's still below all moving average. It's still trapped below the 1800s territory. And everything depends, unfortunately, on the yields, on the central banks. So while we have seen the gold stabilizing and even appreciating a bit today, is the fact that we have seen a bit of a buying pressure, a buying on the gold as a hedge against the overall market volatility due to the concerns over the impact of Omicron variant. That's why we've seen a bit of a buying pressure. We've seen some buying pressure on Monday as well, because we managed to hit the 1820 and then get back. We have seen some buying pressure. Can you see these tails, up tail, this upswing? So we've seen a bit of buying pressure yesterday as well, retesting the 1812 territory and then get back down. So when there are lingering concerns about anything. Okay, this time it was Omicron, and there was a lot of market volatility. We have seen some buying of gold as a hedge against volatility, as I mentioned. That's why we've seen the gold trying to recover once again to move towards the 1800s so far today, even though it has stuck below it. Um, so, however, what is key and what you should keep, you should uh, you should uh, you should understand is that these golds. This is a daily chart, okay, guys. Let me just. So we are here in this very last candle. Um, uh, so this looks to be a bit of a short-term bounce, because as I said, this appreciation it was a result on the fact that the markets have started to pricing that the COVID variant will not derail the economic recovery. So what that means, it means they are calmer than now. They are not on a risk. They're not afraid of something. So this suggests some safe haven inflows into gold, but not as strong as it could be. Okay, because of the more positive comments that we got since yesterday. So lower inflows in the safe haven of gold. Okay, not as strong as it could be if we are in a period that with a lot of uncertainty. Okay, and it seems that all the virus related concerns, comments, news, etc., are offering to gold a bit of a support. So over here on Friday, tried to boost it, didn't manage, but it's stabilized. It got a floor above the 1780. The same stands for yesterday and today. So again, we had comments, virus related comments. So that has offered to gold some limited support, some intraday short-term support. So if I zoom in and go into the 1 hour chart, you can see that this is what happened yesterday. This is what happened so far today. In the beginning of the day, in the Asia session, a bit of a support bounce to 1795, and then a correction back lower. So they provide some limited support. So what is the um, um, what you should, from a technical perspective, the key support for the asset remains the floor that we have seen this week, which coincides with a support level that we have seen back in the end of October, so the 1769. A break of that level could open the doors down to the 1740 and 1757 territory. So this is your immediate support level. The lows that the low that we have seen yesterday, coinciding with the low of October, and it's below the trend line, the 2 months trend line, and so on and so forth. So why gold, whether actually gold could eventually benefit more, is something that we cannot really say so far, neither from the technical perspective, neither from the fundamental best perspective. Because from the technical perspective, in order to say that gold will get back to above to the October November highs, we need to see, first of all, an improvement in the momentum, in the momentum indicators, so RSI above 50, MACD positive, etc. But more precisely, we need to see the gold getting back above the 18, let me be precise, 1820 territory. So this area over here that I have colored is the mid area of the sell-off that we have seen, of the down leg that we have seen in November, and also coinciding with the 20-day moving average. So for the asset to suggest that it has turned into a positive outlook, from the technical perspective, we need to see a move above 1820 territory. Now, from the fundamental perspective, uh, um, even though we have seen gold benefiting temporarily or in the short term from the um, with all these questions and concerns around the new variant, the main driver of gold is the Fed, and what we'll do on the 15th of December. Let me check because I don't really remember. It was somewhere around there.
Yeah, Wednesday the 15th.
Wednesday the 15th, as Stuart says. So yes. So um, overall, the key, as I said, the main driver of the gold remains in the medium term, at least, not in the short term, remains what the Fed will do, and whether gold could face pressure from the Fed or even from Friday's NFP data, if the data confirm the strengthening of the labor market. So it's not so much about these ups and downs that we're seeing, this support that we see in the very short term due to the comments and the change of sentiment around the variant, but what is key and what you should follow in the medium term for the next few days and weeks is what is first of all the NFP that is this Friday, but mainly the Fed and what it could do. From the technical perspective, as I said, the the near term support lies at 1769. The near term resistance, let me go to the 1 hour chart. The near term resistance, this is the 1 hour chart, holds at the confluence of 23.6 Fibonacci level, the day's highs and the Bollinger Band area, which is at 1795 level. So this is your immediate intraday resistance area, okay? While the daily chart, key resistance is up to the 50% retracement 20-day moving average at the 1820. So hopefully I covered everything in regards to gold, guys. For the time being, this is the 1 hour chart. It has found some support. It's keep moving higher. Let me just set my intraday setup. Um, Here we are. So intraday setup, got some support, appreciate from the 17, from the lows of the day. Remains above 5, 9, and 20 period moving average. So further bullish bias can be seen gold in the very short time frame. This is a 30-minute chart. As you can see, RSI is at 17, pointing upwards. MACD is positive. Stochastic has bullishly crossed over here. So in the very short time frame, 30 minutes, so for the next few minutes or even an hour, etc., we have seen further support on gold. So intraday, the next key resistance area is at the 200 period moving average, so just a dollar higher, and the upper Bollinger Band area at 1793. This is the next immediate resistance areas in the very short time frame. So I'm in the 30-minute chart, so I'm referring to a 30 minutes time frame. Let me see. Okay, so let's move on to pound. Ronald, thank you for staying here and patiently waiting about the pound. The pound. So, pound. Here we are. So, guys. Sorry, just let me. Okay, so let's start with the daily chart, of course. We had yesterday, more precisely, we have a long leg candle. Can you see that? So a very long leg to the downside, another long leg to the upside, and the doji candle, a small body candle in the middle. So we had actually a lift initially of the gold due to the risk aversion pickup. And because treasuries have rallied, so yield, for example, has corrected yesterday, and so far today remains well supportive. That's why we have seen. If I just move on to the 1 hour chart, you can see that we had some appreciation yesterday before this dip lower. Another appreciation so far today has to do with the sorry, with central banks, of course. So let's take it step by step. Yeah. So right now, the pound once again is trying to. It nearly have covered to has managed to recover more than it should be around 80. let me just be precise. Just add the point. Oh, come on. 8860, 88.6. It's the next Fibonacci level. Okay, hasn't managed to reach that level, but it has recovered more than 70% of the losses that we have seen yesterday. Um, and that's on the this boost higher. Okay, this retracement from the lows that we have seen. It has to do with the central bank. So we have seen the Bank of England saying that saying in November, not like in November, that it will probably have to raise rates from its all-time low of 0.1% over the coming months. But now we have seen some comments from the policymakers, like doubting a bit whether they will indeed proceed with the rate hike or not. They have sounded this week a bit more divided. Okay, divided is the word. Divided on the prospect on whether they will indeed proceed with a rate hike after this new coronavirus variant. So now we have seen a bit of a divided policymakers, but divided odds as well on whether indeed the Bank of England could proceed or not with the rate hike. So for the time being, the markets are pricing in only 9 points of rate hike in December compared to compared um, to 8 points yesterday. So we're seeing that it has rise a bit with a point. Okay, so that's why we have seen pound getting back to 133.20 level. So this is a pricing of a potential rate hike even December 16th. So the meeting will be December 16th. So what else? Pound was supported by this pricing, also by the improving risk appetite in global stock markets that bounce back after falling on Tuesday over here. Okay. So for the time being, what we are seeing in the hour chart is a quite a turn into a more neutral stance, because we have seen that the asset, even though it was well supported away from the lows that we have seen, the 2 weeks lows that we have seen yesterday, we have seen it trapped between the 133.30 and 132.80 territory. Or even more precisely, to be honest, 133 to 133.30. So it has dropped the last few hours within that territory, with the momentum indicators in line with this consolidation. You can see MACD has flattened, it's at 0. RSI at 54, so very, very close to neutral zone. And indeed, the asset has failed to move above 133.30 for the last 8 hours in a row. So yeah, for the time being, we see some kind of a consolidation. So the key immediate support and resistance levels are set on the day's highs, 113.30, and support is at 113 territory, round number, and the 61.8 Fibonacci level from yesterday's fall. Okay, so a bounce and a break of 113 could turn attention to the 88.6 Fibonacci level, which is very, very close to the um, uh, 200 period moving average, but also the upper Bollinger. While to the downside, they pulled back again. It could bring the asset back to below 133 level, of course, back to 132.80 or even 132.60 territory. Okay, so for the time being, intraday we have a very neutral, uh, choppy move. Now, in the long term, pound has been seen in a sell-off for since actually May. So it kind of presenting a descending channel. So if I just, yeah, that's a much better one. You can see that is moving into a descending channel since April. So right now it's at the lower territory. Can you see this? Let me just okay, you can. Perfect. Uh, Horon, you have asked about pound yen. Keep an eye on what I'm saying about pound, and we're gonna is the very next one that we're gonna cover. So right now it's at the bottom territory of this downwards channel of this 1, 2, 3, 4, 5, 6, 7 months downtrend. So it's at the bottom of it. So you with MACD increasingly negative, with RSI close to overbought barrier. So the overall technical picture outlook of pound of cable remains negative. Um, so uh, yeah, you can see 20 period moving average, 20-day moving average pointing lower. The asset has formed yesterday a fresh new lower low. MACDs keep extending lower, implying that more and more bears are entering the market, and that this bounce today, it looks like just a short term one. Yeah, the overall outlook remains negative, guys. Okay, so let me just. Do, 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 do. Anyway, we might see this bounce or this steadiness, actually, to be precise, this steadiness that I talked about earlier. This steadiness intraday between 113.30 and 133.30, 133 territory is something that we can identify from all the majors, and it's because of we are just um, come on, 3 hours, 2 hours. Let me just double check. We're just an hour away from the from Powell's testimony part two, okay, and Bank of England's ballet. So we're gonna see Mr. Powell testifying before Congress for a second day in a row in less than an hour, but we have Mr. Ballet as well speaking, and to be more precise, Mr. Ballet is speaking at come on, where is it? It's not shown in my calendar for some reason. Let me search for it. So, Mr. Barney, we have the exact time. Speaks at 2 o'clock GMT. So now, actually, yeah, that should be soonish. So it should be 4 o'clock my time. So we should see Mr. Bali's comments soonish. So if Bali today, just in a few minutes, in his speech today, reacts to the higher inflation risk, we might see pound appreciated even more. Oh, I can see a bounce. So it means that Mr. Bali might be on his feet. Let me just double check. Um, Let me check. No, I cannot really find out anything about Mr. Bali yet. It should be live now, or should be speaking now, but cannot see something yet, guys. I'm not sure what you mean about trust wallet address, dear. It's safe. It's if it's with us, you don't need to worry about your wallet address. I'm not sure whether what you're talking about, but please send a text to our support team. They can help you with it. So yeah, guys. Oh, we have a bounce on pound. I'm not sure whether it's Mr. Bali's fault. Um, we're gonna learn in a second, but it has managed to break this resistance area. So the very next one, as I mentioned, is over here, or even at the peak at yesterday's peak, up to 133.60 to 65 territory over here. So keep an eye on that. Might be Mr. Ballet and his comments. My Bloomberg TV doesn't show anything right now, so I'm not sure what is going on. But the fact that from technical perspective he has managed to break that level, it implies that more bulls are entering in the short term of the market and they are boosting cable to the upside. Okay, guys. Um, so yeah, if Bank of England Ballet today follows Mr. Powell's in acknowledging increased inflation risk, then this could further support the pound, the sterling. Okay, because having moved to price out the December 16 Bank of England rate hike, the market participants may start to put a 15 basic points. I said that we are right now, the markets are expecting a 9 points rate hike, but if Mr. Bali acknowledge the increased risk of inflation today, the markets could start pricing in a 15 points rate hike back into UK money market rates. So this could boost further cable and sterling in general. So big jump on sterling. So guys, you can see that I don't need to further explain anything. Let me know if you need anything else about cable. This is in the short term. In the long term, we said that only a move and a breakout of this regression channel, mid-level regression channel at 133.50, it could turn the medium-term outlook. For the timing, the overall outlook remains negative. Intraday, we have a continuation of the pound's appreciation, so continuation. Next resistance 133.66. And let's get back to yen. Yen, here we are. Yen found a lot of benefited significantly with the Omicron variant. We've seen a big shift of on the risk aversion. We've seen a bit of a lot of benefit. The yen was the key beneficiary so far this week. That's why we've seen dollar yen dipping lower down to 112.50 territory. So it will be interesting to see whether it could could get back to 112.50 territory. But for the time being, we've seen a bit of a turn to the downside. So lower highs, Bollinger's expanding lower. MACD has decline below its signal line, suggesting increasing negative bias. So yeah, dollar yen could be seen uh, retesting again the 112.50, but we cannot really be sure yet because this decline has been stalled. So for the overall outlook, it looks steady as long as it doesn't turn back below 112.50. Intraday now, we have seen a reversal from yesterday's losses, topped but failed to break its consecutive resistance at 113.60, and now is turning back down again. It's turning back down. So so what we have here, let me just double check, guys. So yen turns back. We have a big pullback the last hour, breaking the 20 period moving average. This is the 1 hour chart, breaking the one with the 20 period moving average. Parabolic SAR have turned, suggesting the shift of sentiment from positive into negative right now. Let me check a bit what's going on. Da, 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 da. So yeah, indeed, this boost higher has stalled. Now it's turning back down, broken the 20 period moving average. So the next support level for yen intraday is over here, double fractal hourly fractal, and also the lower Bollinger Band territory at 112.92. So very, very interesting, because this floor over here, guys, is also the floor that we have seen, the swing low that we have seen back in Friday. 113 anyway is a natural support level, so it's keep to be watched, and it looks that the asset is reversing the gains that we have seen so far today, and it has started establishing a more bearish tilt. So dollar again back down again. On the US Open. Okay. A fresh wave of risk aversion is what we are having in the US Open right now. That's something that supports the yen against dollar. So we have like a resumption of the yen rally against dollar. So a drop on treasuries once again on the US Open. And that's something that supports the yen against dollar. That's why we've seen dollar yen to the downside. Let me check something. So here is our daily chart. If we set our Fibonacci levels from the top over here down to the yesterday's low, and this is the 50-day moving average. We can see that okay, it remains below its 50-day moving average, below the 20-day moving average, and it hasn't managed to recover anything from the sell-off that we have seen since last week. So the outlook for dollar again remains negative, with 112.90 to the immediate support level, and if that breaks, then we might see a retest of yesterday's floor. Okay, guys, so a break of this floor, of this double fractal, and the 1 hour Bollinger, lower Bollinger, could open the doors to yesterday's floor and the 112.45. So in regards to yen, okay, the yields differentials are the key main mover, but intraday is all about sentiment. It's all about risk on, risk off mode, risk on, risk off. And it seems that on the US Open is what we are seeing right now, is another rally in yen. Let me double check the news to see whether I'm missing something, but Cannot really see something, so it might be just the US Open and nothing else than that. Um, yeah, cannot really see anything. Powell can consider ending taper soon is a headline that I can see in Bloomberg right now. 10-year US yields slightly lower on the US Open, just 3 points lower. Dollar yen down. Emerging markets, Turkish lira also down. Okay, so just what's going on with the dollar index. Dollar index started falling again. The dollar, remember, we've saw once we the very beginning we started our live, we saw 96 steady at, and the dollar index steady at 96, but where we're seeing now is another pullback lower once again. And the inability of the dollar to gain upside traction, so ahead of Powell's second testimony. So guys, the immediate support has already broken. It was on the latest fractal, so has already broken. The ball just started slowing down. The fast moving average has have bearishly crossed. Sorry. So the next immediate support level for dollar index is at 95.75 and 95.57. These are the next support levels for dollar in the very short time frame, because I'm in the 30 minutes chart. 95.65 also an additional support level if you want to, with the latest fractal over here on the dip. So yeah, dollar turned back down again below 96, unable to sustain an upside traction, another bout of weakness. Yeah. So let's get back to the question from Ohoron, pound yen. And I will, once we do that, well, I'm going to finish with oil. So pound yen, here we are, very risk sensitive asset. Let's start with the daily chart. So dollar yen has been to the downside since the mid of October, extending lower, breaking the 200. This is the red one, is the 200-day moving average, breaking it and getting back to August and September's low territory. So I just identify some immediate support and resistance levels over here. Okay, so let me just no. Okay, so dipped, break the October November support, retest 200 moving average, broken 200-day moving average, and is below that for a second day in a row, with the next real floor for pound yen down to January, February to 11-month support down. Then in the a key support for pound yen is the 149 level. Is the year's support. So it looks like it's been in a big sell-off for the last 2 months. Uh, Even though the Bollinger has stabilized over here, we can see that all the moving average are pointing further to the downside. Let me put the daily chart on, guys. So let me just. So below 200, Bollinger's parabolics are above the price action. So that's bearish signal. MACD extends negative, another bearish signal. RSI fails to actually steady at close to 30. So negative bias remains for pound yen, my dear Honor, with 49, 149, the next support level. So if you are now asking, okay, in regards to recovery cannot be really seen as long as we don't have at least a return back to the 153 territory. So that's the confluence of 2050 day moving average and 38.2 Fibonacci level. But the fact that we have a cross of the 20 period day moving average below the 50-day moving average implies to further pressure on the pound yen in the medium term, in the daily chart. Now, if you are interested in the intraday time frame, it posted a high at 151 and is turning back down again. So let me put my fast moving average here. So it's turning back down. Fast moving average have clashed, so we're not really sure yet what is going on intraday. We don't have an indication that indeed is gonna um, go further lower, because for the time being is sustaining a floor above 150 territory for 1, 2, 3, 4, 5, 6, 7 hours in a row, and the fast moving average over here have clashed. So we need to wait for this candle to close to see whether the fast moving average will be bearishly cross, whether the 5 will cross, will move below the 9. That will give us an indication of whether there is further sell, further pullback for pound yen. So if you're waiting for the top of the hour to check the signs from the fast moving average, then if indeed you can see a confirmed bearish cross, the next immediate support levels rely on the 1561 Fibonacci level, so 150 50 territory and 150.35 territory. Okay, so that was for pound yen. A bit of a pullback, but remains in the upper Bollinger Band area. So let's wait and see. So guys, if you don't have any further questions, I will finish with oil and I will call it a date. Okay. So let me just double check the news to see whether Mr. Bale said anything. No, I cannot see something. It's weird. Who knows? Okay, oil. I didn't mention anything about OPEC Plus, but OPEC Plus started its 2 days of talks today. And it was a meeting that was pretty much expected after this sell-off, the huge sell-off that we have seen, and the huge slide that we have seen on oil lately, well off its 84 territory, down to August 2021 level, down to 60 level. So what about oil? Oil has been seen overall to the downside, a big sell-off with momentum indicators further supporting further pressure to the downside. You can see MACD increasing to the negatively increasing. RSI the same is at 32, forming some kind of a lower highs, so suggesting to further bearish bias, while the asset has, even though it has slightly appreciated today, it has bottom at 64 territory yesterday, which lead us back to June 2021 levels. So the overall the medium term bias remains negative with immediate support at 64.20, while a breakout of this level could open the doors to the 61 level, which is a support level that we have seen for the last so May, June, July, August, September, October, November, for the last 7 months. But it's all about OPEC. And whether they will decide to release more oil into the market, or whether they will decide to restrain supply due to this big sell-off of crude prices, and because of the fears in regards to weaker energy demand because of lockdowns, of restrictions, and etc. So it's all the eyes are on OPEC and what they were gonna and any comments that we're gonna get today and tomorrow by the meeting of ministers from the OPEC plus alliance. So from the technical perspective, the overall outlook, as you can see, the medium-term outlook remains negative, with the next support levels at 64.20 and 61 territory, while intraday we have another refreshed pullback down to 67.50 territory, but it is hold a bit steady. So we need consecutive bearish candles breaking this 20 period moving average in order to suggest that it will get back down again. So let's get back to the 5 and 9 intraday. So you can see the fast moving average have clashed. So the intraday outlook is neutral for the time being. Attention should be on the 67.15 territory. So a closure below the 20 period moving average could retest the 65.80 or even 64.90 territory intraday for oil. So both intraday and medium term outlook remains negative. So attention will be on the OPEC plus talks soonish. So the talks began already. They began like an hour ago. And we're gonna have 2 days meeting. So we're gonna have another meeting tomorrow. So any news from the OPEC Plus meeting could be key for the future of oil. But if they proceed with further release of oil, that would be negative for oil. If they decide to restrain supply, that could support the oil prices. Okay, guys. Any further questions before I call it a day? Good for you, Thanto. So I will check one more time whether we have anything new. So OPEC Plus not looking to change production output policy for now. That's not really confirmed though, so we cannot really rely on this headline. So nothing else. Bidding permits at 1.3% versus 1%. So we are good to go, guys, if you don't have any further questions. So keep an eye on everything we taught you. Keep an eye on the Fed, Mr. Powell today, and Mr. Bale. Keep an eye on the OPEC Plus. Keep an eye on the Omicron variant. Any comments from Pharmaceuticals and any virus-related headlines. Unfortunately, everything matters nowadays, and turn your attention also to the NFP. For the time being, and based on our traders board, let's finish with our traders board. Since this morning, I had seen that the Kiwi was the strongest currency. Let me check whether this is still the case. Okay, yeah, Kiwi and Aussie remain the strongest currencies of the day. So the commodity related ones, Kiwi, Aussie, and CAD, while the weakest currencies of the day is first of all the Swiss, then euro and dollar. So I would like to thank you for attending today's live. Hopefully, I managed to help you with anything you needed. We're gonna have another Facebook and News Live on Friday before the NFP with Stuart. Feel free to join us and ask anything you want. We'll be here to help you as usual. Thank you very much for attending. Hope we're having a great day ahead. And I'll see you again on Friday. Take care. Bye bye.